I want to welcome everyone to today's webinar. I'm Ryan Fisher, an account executive with CamaPlan. I'm going to go through some brief slides here with you guys today, and then I'm going to go ahead and turn it over to Carl Fisher and Bill Bromley. I want to start by letting everybody know that CamaPlan is a neutral third party. We don't give any investment advice. All this information is for educational purposes only. We encourage you to work with your accountants, attorneys, financial professionals before making any type of investment. What is a self-directed IRA? You can get definitions out there all over the place, but basically you can invest in anything that you want. There's a few things that you can't invest in, and I'll tell you those in just a moment. As long as collectibles and life insurance is what the IRS prohibits you from investing in. As long as it doesn't classify as that, then most likely you can use your IRA to make the investment. Obviously, you'll see the exception for the precious metals as well. This is what we see most of our clients investing in: real estate, precious metals, that's physical bullion, stored at a depository, notes, mortgages, private placements. Bill's going to give us some insight on that, and private lending. Again, CamaPlan's a third party. We don't give you any investment advice. Basically, we're a part of your team. We'll specialize in reporting for your self-directed IRAs. My contact information is on the screen. You can reach me at rfisher, F-I-S-C-H-E-R, at CamaPlan, CamaPlan.com, or on my cell, 201-687-9263. You can also schedule a phone consultation at our website. For anyone that hasn't been there, there's a lot of good information there. Please visit the website at CamaPlan.com. I'm going to give it over to Carl here. I want to introduce Carl Fisher. He's a principal at CamaPlan.
Hey, thanks, Ryan. Appreciate the little rundown on self-directed IRAs there this morning. Today I'm happy to Bill Bromley, who's the CEO and president of Capital Source 2000, Inc. And you can also sign up with him on LinkedIn. He's got a LinkedIn profile. He's had 35 years experience as a bank founder and CEO in the Philadelphia area. And I don't know exactly how many, but I know it's in excess of 35. He's raised over $35 million for financial service ventures. He's a Wharton graduate, and he's one of the most knowledgeable people I know in the merchant cash advance business loan field, which I don't know that much about, so that's one of the great reasons I brought Bill on today. He's building a successful finance company in a niche that banks can't do or don't want to do. I'm not even sure about that. So, in summary, Bill will give us a brief education on business loans with merchant accounts and private equity that you can do with that. He'll go over the pros and cons, what's needed, how it should maximize profits and minimize the risks. Bill will tell us about how he structured his company because I want to kind of understand it and why it's successful in today's economic conditions. So, Bill, I know you have a pretty impressive resume in the banking world. Is there anything I missed in there that you would like to add on to and talk about your career path maybe?
Well, I guess thanks an awful lot, Carl. I appreciate the opportunity to talk to you and to talk to people on the webinar. Yeah, it's the part about this that's very interesting is that I spent my career in banking. I've worked for large banks. I've worked for small banks. I started two banks, one called First Sterling in Devon, the other one called Eagle National in Upper Darby. We ended up selling both of them. But the real issue here in the financial services area is the regulators. The pendulum for regulation has swung way to the right in that they are so strong. The Consumer Financial Protection Bureau has, with its founding back in the crisis of 2010, has just tied the hands of most bankers, incredibly limiting what they can do for the customer. I hate to just as by an example, the Consumer Financial Protection Bureau is now putting out more concerns and regulations and disclosures for overdraft lines. They believe that there isn't enough knowledge in the customer for overdraft lines, so they want to put out a new set of disclosures. The disclosures for most banking, most mortgages, and most overdraft lines are already about 10 to 20 pages, and now they want to put out a little bit more. It just goes to show you how far out of whack these things have gotten, and that's one of the reasons why banks do not do what Capital Source 2000 was founded to do and does now. It's an exciting opportunity. It's a piece that works outside of the regulators right now, and that's why I'm in it. The irony of that is that I believe that it's highly probable that exactly what we do will eventually become part of banks. I do have several banks that are interested in providing credit lines to the company, and I have several banks that are also interested in possibly buying the loans that we originate. So we'll see how that goes, but that's not the case today. Today, everything is funded with private investor money and our own capital.
Okay, so that's great. You've seen all types of investing, I'm sure, over your 35 years, loans and rates, return, etc. So your finance company is outside the traditional banking model right now, I'm taking it. So can you tell us what it is you actually do?
I can. Thank you. So Capital Source 2000 works in a niche for small to medium-sized businesses. You may see that the term is being used more and more called SMEs, small to medium-sized enterprise financing. What we do is we provide expansion capital to small businesses of all different types. We'll show you in our presentation here the types of businesses, the industries that we service, the percentage of our portfolio that is in each of these industries, and exactly how it works. But the reason that this industry or this opportunity exists is because the banks have pulled back from small business lending. They've also pulled back from collateral that is other than real estate. They do not really do accounts receivable. They don't do inventory. They don't do equipment. I know people traditionally think that that's what has happened, but believe me, based on the regulation now, they do not do loans secured by accounts receivable. We have filled that niche. This industry really did not exist much more than 15 years ago, and this niche was filled primarily with friends and family money and credit cards. So when we're talking about a restaurant who has had a successful operation, they want to open up a second location in a strip center where they do not own the real estate, they might need $250,000 for leasehold improvements. That's the kind of deal that we will do, and we will do it based on the cash flow of the existing location and a projection for the new location. But our primary payback and our primary collateral on this is their accounts receivable, or really what we're looking at is just the cash flow of the company. So these loans, this is a very interesting niche in the marketplace. I'd like to say that I'm one of the leaders. There's over 1,000 companies in the United States that are doing this business now. Later in the presentation, I'll talk to you a little bit about the largest players and competitors, about where they are and where they're different than what we're doing at Capital Source.
Okay, that's interesting. So the past kind of tells us that all the regulations and the banks don't want to do it, but you're already saying some of the banks are doing that. So can you explain to me the future economic conditions, the way you see them, that are going to make you sure that this business will go on? And I mean, you're passionate. I can hear it in your voice that this is a good investment at this point. But I mean, it's a business that I just heard you say was 15 years around. And I haven't really heard of it before. And not that I know everything, but it is interesting to me. So why in the future do you think this is a good business?
Well, I think, first of all, there's a couple of pieces of it that are part of the basic structure that that put it in high demand, and it meets a niche and a need that is absolutely I don't say that it's insatiable, but basically it's unmet largely in the current financial industry. So the ability to do this in the future and the success of this company into the future has a lot to do with the growth of business in the United States. Obviously helps a little bit with the political climate or with the Republican president. But it also has to do with how we structure this. When small businesses are looking for expansion capital, and that's what this is. It's not a loan. It is actual capital. It's debt capital that we extend to a company and usually take a payback over about a 6-month period, 6 to 9 months. So the money is not out for a very long time. But when a company needs something, if they have an opportunity to execute on a contract, but they need a $200,000 piece of equipment in order to execute the contract, that again is the kind of deal that we like to do. We will look at the cash flow, we'll look at the profitability of the contract, and based on that, we will make them, usually within 24 to 48 hours, we'll make a decision to advance them the money. So we document and close in 48 hours. Small businesses don't need a bank that's going to take 60 to 90 days to make a decision on something. When they need money or they have an opportunity, they need someone that can move quickly. So that's part of why this niche exists. It's also why the banks are not in it. The banks cannot move that quickly. As a matter of fact, we get a fair amount of some of our business from banks, customers, where the customer needs the money in a short term, and we have advanced. In one case, we advanced up to $400,000 to a ready-mix cement company, only to be taken out 90 days later by the bank that referred it to us because they had a chance to do all the appraisals they wanted to do, check the financials, check the background, do all the financials and approvals that they needed. And
Bill?
that's, yes.
When you're talking, there seems to be a little squeaking noise there. I don't know if your volume needs to be turned down or up or something, but it was coming through there.
Let me just see here if I can. All right. Does that do any better? I just turned the volume down a little bit.
Yeah, that's definitely better. I think you're getting feedback there.
Okay, fine. Thank you. So let me so by summary here, so we have a business that provides short-term working capital for small to medium-sized businesses. We underwrite in 24 hours. We close in 48. The underwriting is different than some of the larger companies in the industry, which I will explain to you. And we have more loans, or up until recently, we've had more loan volume than we could handle with our capital base. So we're constantly looking to raise money. We have our company is funded primarily with its own capital, our money, as well as our investors in our secured debt notes. Along with, we also have a proposal on the table from a private equity fund who is looking to put $20 million into this type of business. Most of our companies do between $1 and $10 million, as you see on the slide, and our clients are located throughout the United States. So we have diversification both in terms of industry, which I will show you, and the geographic dispersion around the country. The industry is and it's very hard to make estimates of this stuff, but basically that we believe that there is about 285 billion is what they said in 2015. I don't know if that's exactly right or it's even close, but it's a very, very large industry. Carl asked a minute ago about where this industry came from, or how did it exist, because nobody knows about it, or nobody seems to know a lot about it. Well, back when the last financial crisis in 2010, small business lending in banks really has dropped off. The TARP program, you can see from the slide here, has really done very little to make an impact on small business lending. And the reviews have shown that most small businesses that apply for loans through banks don't get them. So, but this niche is critically important. It's where over 50% of jobs come from in the United States now, and have been for many, many years. So even the politicians understand that this is a really important part of the business. We're helping companies expand. We would like to think that we're also providing opportunities for jobs and expansion of the economy. The banks, on the other hand, have a hangover from the 2010, from the 2010 recession, which reflects on two things. One, they now have higher reserves for the loans that they do. There's more regulation, which makes it slower and more cumbersome for them to do a loan, and they are honestly more reluctant to do it because they don't want to incur the wrath of the regulators. So merchant cash advance, which is a non-bank product, as I said, we fund in 48. We leverage cash flow. If you don't have real estate, that's okay with us. We're fine to do it without real estate collateral. So we fit into a niche that really looks at the business itself and its cash flow.
Hey, Bill.
Yes.
Is it fair, and you don't have to answer this, but who are your competitors in this space?
Absolutely. Well, first of all, what I've done is I put up a slide here with the largest competitors, and that includes Lending Club, Cabbage, Prosper, and of course OnDeck is one of the biggest. These people are certainly in the same business that we are. They also encompass a lot more than what we do. We primarily do merchant cash advance, small business loans, which are advanced to the customer. It's really venture capital. It's not a loan because it's high interest rate, but it's a key piece for them to expand their business. It's an expensive proposition, and it's all debt. We take no equity in the businesses, but once they do that, and if they pay us back over the period of time, and we took, the money is ACH'd out of their accounts on the business days that we do it. The key is that it's short term. That in 6 months we are in and we're back out, and hopefully they have a new piece of equipment which is generating revenues for them, or a new piece of a new location, etc. And that's where we spend our time. So looking at the competition, Lending Club is certainly one of the biggest. They have also been in the news as they sell off their loans to other investors, private investors, primarily private equity investors, and they ran into trouble because they were misrepresenting the quality of the loans and the performance of their loans. Cabbage and Prosper are similar in that what they do not just merchant cash advance, they do consumer loans also. Our loans are not consumer loans. We do not make loans to any individuals. We only make loans to small businesses. All of these guys are much larger than we are, and they use something called algorithmic underwriting. They're trying to use what you call big data or large data pools in order to predict the performance of portfolios. and they're determined that that's the way that they want to go. We do not do that at all. We do exactly the opposite. We do underwriting what we classify as the old-fashioned way. We look a lot into the background of the individuals. We pull up all kinds of social media, searches, personal information on the CEOs, details on the business, and then we also do a site inspection, and we also do a CEO interview with each of our potential lending customers. That's not the way these guys operate. However, we're not the only one, as I said, doing this. There's probably 1,000 companies that are in the United States that are in this business that are probably more along the same size as we are and operating in the same way. That being said, with the size of the market, there's tremendous opportunity to grow this as we move forward.
So, if I heard you right, your experience and that of your underwriting team is critical to the success of your business, because that's what separates you from the other players that are using the algorithmic big numbers to come up with their loan profile, I'm assuming. Am I on the right track from that?
Yeah, absolutely, Carl. Let me explain a little bit further.
Can you tell me how that's structured?
Well, yeah, first of all, in terms of the process, we do a couple of things differently. We have our own call centers, and that's how we originate our loans and our prospects. So we actually have outbound call centers. We have 6 of them that we contract with to pick up and to make calls to small businesses. We use lists coming from Dun & Bradstreet, Hoover's, most of the major suppliers in New York, looking for companies that have shown interest in expansion, have applied, maybe applied for a loan, have been turned down. So we reach out to these companies on a national basis with call centers. That's important because all of the loans that come into us are from our own people. Some of the other companies and most of the other companies use brokers to bring their loans in, and the reliability and the performance of brokered loans is not nearly as high as what we've seen with our own originated merchant cash advance. So the call center origination, our own, is very important. Secondly, our background checks are very extensive. As I said, we do interviews with the management of the company. It's very important, though, that we do site inspections. It's very difficult. You might think that's very difficult to do. We have a firm that we contract with that within 24 hours they go out to sites, they take pictures, they interview people, and they send it back to us, all within 24 hours. So that we have a real good sense as to what's real about the business that we're trying to look at. The payback on a merchant cash advance, as we're saying here, is a factor rate of 1.35. What that means is if we put out $100,000, we're going to take a $35,000 fee for it. That's not cheap money. But our underwriting and the best way to underwrite this is to make sure that whatever that money is used for, it's going to pay back to the company a lot more than $35,000 in profits. That's how we do this. This is not for companies that struggle. This is not for companies that are trying to make payroll, or they're trying to pay off liabilities, or they have any kind of tax problems. This is clearly for expansion for companies that are successful. We do them, I have on the slide $25,000, $250,000. We actually go right now primarily between $50,000 and $500,000 in doing these deals. When we put the money out, we start to ACH it back to our company on the following the business days, 5 days a week for the entire term that the money is out. And we look, and we have the rights to take the the accounts receivable of the company and the cash position is our primary collateral. But that's it. That's all we have in terms of collateral. So the underwriting of this is critically important. If you look at the next slide, you'll see what I was just talking about. Capital source is really the funding portion of our company. This is where all the investment capital goes in, our own money goes in, et cetera. CBSG does our underwriting and servicing. They have been at this for 5 years. They have a very strong performance record. That's why our loss ratio in this business, seemingly, potentially a high-risk business, is under 2.5%. There's a lot of banks out there that would like to have that same experience, but it's all in how you underwrite, and it's all in the fact that we originate our loans through our call centers, not through brokers. So if you look at the slide, the ISO origination is basically our call center. CBSG is our processing, and Capital Source 2000 is the marketing arm and the capital provider to what we do. And that's where our money goes in. That's where our investor money goes in. In terms of how we perform, the other thing that's very important is that we're diversified really in 2 ways. We have very thorough background checking, et cetera, but we also have diversification by industry, and we have diversification by geography. You'll see here that we have a wide variety. We have retail, construction, technology, finance, automotive, restaurant, energy, medical, marketing. We go all the way down through this: salons, home services, travel. Each one of these is only about 8% of our portfolio. Some are less than that. Home services, gym and salons is actually growing. Salons is a very good business for us, and we're doing more and more of that. But other standards like retail and construction are very strong for us. We do, particularly, what will happen is if in the construction industry, it's not, construction is a seasonal industry, so we're very careful about when we make those loans. But we particularly do construction when there's been a hurricane coming through the southern portion of the United States. We have a book now of we have a total of, in our whole access, we have about 4,000 companies that we have done search on, research, et cetera, that are potential customers for us in the event that they need expansion capital. Construction, we probably have 20 or 30 companies that specialize in electronics, roofing, water, and hurricane damage, restoration, et cetera, that are all down in the southeastern portion of the United States. Consequently, when a storm comes through there, we get a strong variety of calls coming from these people because they need an immediate infusion of capital to handle all the business that has come from the hurricane. That's just one example of how this whole thing works. We do medical, as I said, or as I listed on here. We do dentists, we do doctors, we do chiropractors, we do physical therapy, et cetera. All about, again, the expansion of their business.
So basically, the risk is people not paying back, but between your diversity and the companies you look at and your underwriting process, you've got that down to about 2.5%, if I heard you right.
That's correct. That's true. The other thing that's very important in this, and it's one of the reasons why this is a particularly strong business, is that this is a very short-term loan. When banks make loans, they'll make them for 5, 10, 15, 20 years, 30-year mortgages, et cetera. There's a lot that can happen to even the best borrower in that time frame, and I can vouch for that of all the years in banking. I mean, there's deaths, there's divorces, there's accidents, there's any variety of things that will happen over that period of time. In this particular situation, we're in and out in about 6 months. So if we see problems in the economy, if we see problems in a particular industry, within 6 months, we can go to cash 100% in that vicinity, in that industry. That's really important.
So if someone was to invest with you, what is their risk? Basically 6 months?
I would say, yeah, we can, our entire portfolio, we can go to cash, and our portfolio right now is about $5.5 million. With just in Capital Source, we have another company that has a larger amount, and we're about to take a $20 million piece from private equity group. Again, just debt capital, which is how all the funding is done in the company. But the bottom line is that yes, we can go to cash in 6 months. And what we do in the normal course is that we try to deploy this cash constantly. We bring in right now, even in Capital Source, we bring in about $250,000 a week comes in payments. And our challenge is to take that and turn it around, because the money that we borrow from our investors ranges from 12 to 18%. So it's not cheap money either. We've got to make sure that it's deployed at all times, and we do that pretty thoroughly, pretty regularly.
Okay. So if I'm a company and I want to borrow money from you guys, how do I contact you? You know, I understand that I'm going to pay about $35,000, and I'm going to pay it back in 6 months or something. How do I contact you and find more information on that?
Well, I have. First of all, I've got my own. My contact information is attached to the back of this slide program, so I'll bring it up for anybody on the window. But we actually, I mean, we take incoming phone calls, but the vast majority of our business is outbound phone calls. I certainly am interested, and I am working now because of my background. I'm actually working with banks about working with their customer base to provide this service through their customers and to the ones that they decide not to do. So that's probably the best way to do it. And obviously, I'm glad to have people contact me. Our website, which you'll see my contact information at the end of this presentation, but our website is capitalsource2000.com. You just have to put it in yourself. It doesn't come up very well with Google because we haven't paid for priority search rights and things like that. But it has all the information on it. Sorry.
Can anyone invest in your company? Would you have to be accredited, or
we try to work exclusively with accredited investors. We have had really good success with the investor pool that we have. But what typically happens is our investment amount minimum is about $100,000, and we get amounts that go from that up to close to $500,000 from individual investors. But one of the parts that's very interesting is that most people start in with one, with a lesser amount to see how it works. They want to see how payments go. We pay our interest on a monthly basis. We wire it out to our investment community. And what we found is that almost everybody that has come in comes back in for wanting to increase the size of their investment. So that works really well for us, and it also sits really well in, as we talked earlier, and Ryan talked when we first started, I myself have used this to invest, to put my investment in a self-directed IRA, and we have many more of our current investors who would like to do the same thing. So it's a vehicle that works really well. It's obviously high yield, and can accumulate tax-free.
No, that sounds great. I appreciate the plug. And is that contact information you're going to give us? Is that for whether you want to invest or whether you want to borrow? They can contact you.
It's to contact me for any of those purposes. Let me just. There you go. I put it up on the screen, but it's it's got that's my cell phone, that's our website, and that's my email address.
Okay. Yeah, and anybody can copy that down, and we'll have it. We'll post this up on the website for people to listen to it as well. Do you mind? So it's William Bromley. The cell number is 610-291-7722. That's impressive that a CEO is putting his cell phone number out there. I like it. And William Bromley at Capital Source 2000. So WBROMLEY at Capital, CAPITAL, Source, SOURCE, the number 2000.com for anybody who's just listening out there. Bill, we're running out of time here to a certain extent. Is there anything that you think we should do we have any other questions out there? If you can, look those up. But is there anything that I should have asked you? This was great that you gave us this information, and I think it's definitely something that people will look into and probably have more questions on. Is there anything that I didn't ask you that you think's important that I missed?
Yeah, there's one additional piece to this that I think is a very exciting opportunity, and that is that we actually are going to start originating bank loans out of a bank in Utah probably in the next 30 to 45 days. They'll be the same types of borrowers, very, very high interest rates out of Utah because they have no usury law pertaining to small to medium-sized businesses. And that will also be an opportunity for investment as well as potential sale to banks. So we have a couple of other products that are coming along, but Merchant Cash Advance, the MCA piece that I've described to you today, is the most important. What we see is an opportunity to provide more products into this same niche that the banks don't touch. That's really where we see it going.
That's interesting. Now, so if you have that, you're probably going to need less investors from the outside. Is that the case?
No, we'll need more because when we originate through a bank in Utah, we buy back every one of those loans. One of the things that's very different about what we do as opposed to Lending Club and the larger guys on deck is that we don't sell any of our loans. We keep them all ourselves. And we think that's the best way for us to go. So we need more investment money, and we see an opportunity to grow this to well more than $200 million in portfolio in a short period of time.
Very, very interesting. I appreciate the education on the subject, and I'm looking forward to discussing this more in the future. I just feel like I took a drink from a fire hose, though.
Well, thank you very much. It's obviously exciting. I've only spent 35 years in banking, running banks, before I came upon this, but it's a great opportunity, and it's an exciting opportunity for business capital that did not exist before.
In summary, you loan money to the to ongoing businesses. They pay you a good rate of return. You pass that along to your investors, and you mitigate the risk by diversity of the companies, the underwriting process, and the short period of time that the loan is out.
That's right. And lastly is the geography, because we do this on a national basis.
Yeah, I saw that schedule too. I mean, I saw that chart with all the people all over the country. All right, Bill, thank you very much for that. I've got to get going to another meeting, but I appreciate the time and look forward to getting you back here in a little bit. Are you doing any live events anywhere?
Right. Actually, what I do is I spend most of my time meeting with individual investors, and I also I'll be one of the local banks. I'm presenting on next Monday to their branch and lending staff to market this product to their customer base and to their prospects that they can't handle in the bank. So I'm working both the investment side as well as the loan side, and that's what I'll be doing for the foreseeable future. But I thank you so much for this opportunity. It's exciting to me, and I'm glad to talk to anybody about it that wants to know more.
I appreciate it. Good luck, and thanks for coming today.
Thank you.